Hey guys, I'm Loaded Forex, aka No Signal No Entry. In today's video, I'm going to show you my trading reversal system. I'm not only going to show you this system, I'm also going to show you my entry criteria, my exit criteria, and my trade management approach. What are the things that I watch out for in the market before I execute, and things that I must see before I close my trade, either in profit or in loss. These are the things that is going to help you to make money consistently in the market. It's not just about pressing buy or sell button. The most important key factors to your success in trading are your preparation, things you do, criteria you set down for yourself before you exit and before you execute your trade. And what are the things you are going to do when trade is running in your favor or trade is running against you? These things are very, very important. And if you are still struggling in your trading right now, don't cry. You are at the right channel and you're watching the right video at the right time. Just make sure you watch this video from the beginning to the end so that you can learn something valuable at the end of the day. If you find value in this video, don't forget to click on the like, subscribe, and turn on the notification button so that you can get notification when we upload another exclusive video tutorial like this. And if you want to be part of our free signals on Telegram, don't forget to click on the link below this video description and take you to our Telegram channel where we give out profitable and quality signals every week. And I will see you after the intro. In this strategy, we are going to use just two time frames. The first one is the 1 hour time frame, while the second one is the 30-minute time frame. We are using 1 hour time frame to establish our zone where we want to take this reversal entry system, while the 30-minute time frame is going to be our entry time frame for proper execution. Looking at the price action right now on USD CHF, the price action invalidated this long-term downtrend line because there was a massive selling pressure to the downside around the zone, whereby sellers was dominating the market. But at some point in time, the buyers invalidated this downtrend line to the upper side, and they also invalidated the last lower high during this downtrend market. Right now, you have to pay attention to the candlestick that invalidated the structure to the upper side. The momentum of the candlestick was healthy bullish candlestick. This bullish candlestick to the upper side represents every presence of buyers in the market. It shows that buyers are heavily present in this market and they are the one controlling the market at the moment. And where are we taking our reversal trade against this uptrend sentiment on 1 hour time frame? The number one rule: don't use this reversal system anyhow. The best place to trade this reversal system is at the frequency key level zone. And if you look at this key level zone here, you will agree with me that price reacted in the past multiple times. Price reacted here, price reacted here, price reacted here, price reacted around this zone here. So in the future, there is tendency that if price action buys to this resistance zone, 80% of the time price is going to respect the key level zone to the downside, or price might also break it to the upper side. Since we are using our reversal trading strategy here, the best spot or the best zone to use this trading strategy is at the frequency key level zone. Since we are taking sell opportunity, we're going to use resistance key level zone around the zone here. Then after establishing this point of interest on 1 hour time frame, then we'll scale down to the 30-minute time frame for execution. On the 30-minute time frame, there are some rules you have to follow. When the price action is approaching the point of interest, you are not going to sell immediately at this point of interest? No. You have to wait for price action to buy to this zone here, then wait for sellers to push the price action to the downside, then wait for buyers to buy to this key level zone again. Then we are going to execute at the second leg of this price action here to the downside. And that is the approach you want to use to execute this reversal trading strategy. Let's play the candlestick. Now the price action is approaching our point of interest, no entry. We need to wait for price action to sell down a little bit right now to the downside to show a little presence of sellers in the market. Then the next thing that we have to do is to exercise a lot of patience and wait for the buyers to pull the price action back to this key level zone. And when the price action is pushing the price action back to our key level zone the second time, then we have to watch out for candlesticks that represent bearish reversal candlestick pattern that represent the presence of sellers in the market. We need this price action to mitigate our point of interest second time again. Right now, if you look at the candlestick that tap our point of interest second time was LD candlestick, LD bullish candlestick momentum. We're not going to execute immediately because there are no signs of sellers ready to sell the market to the downside. So we have to exercise a lot of patience and wait for sellers to give us signs that it is time for you to take sell opportunity. Let's play the next candlestick. The next candlestick that formed was bearish candlestick pattern. And if you look at this two double pattern system that formed right here at our point of interest is tweezer top. And tweezer top represents the presence of sellers at our point of interest. After the formation of this tweezer top, then you execute by using your short position tool. Then you target twice of your risk, or you target this key level zone. Let's play the candlestick. Right now, the price action is moving towards our point of interest with heavy momentum. Let's see what the price action is doing. Price action is going down. Price action smashed our take profit level. If you want to be part of our free signals on Telegram, don't forget to click on the link below this video description and take you to our Telegram channel where we give out profitable and quality signals every week. Another beautiful example on Euro USD right now, looking at the price action on the 1 hour time frame of Euro USD, the buyers are the one pushing the price action to the upper side with heavy momentum, whereby the price created higher high, higher low, higher high, higher low, higher high, equal low, then higher high. Remember, we are using reversal trading strategy to trade during a trending market, and we are not just using this strategy anyhow. We are using it at a key level zone, frequency value key level zone, where price has been rejected multiple times. If you look at the historical data, you agree with me that the price reacted here sometimes ago more than 2 times. The price action once reacted it first time, reacted again, reacted again. Remember, for you to establish a key level zone or frequency key level zone, you must be able to see minimum of 3 touches to confirm that this key level zone is a valid or frequency key level zone. So there is tendency, if the price action comes back to this key level zone in the future, price is going to react, then sell to the downside. When the price action is at our point of interest, we are not going to execute immediately. We have to wait for price to buy to our point of interest. Then we see a little bit of loss in momentum on the buyer side. We need sellers to pull the price action down a little bit. Then the buyers should buy or pull the price action back to our point of interest second time. Then we execute without hesitation. So we're going to use 30-minute time frame for our execution in today's video. On the 30-minute time frame, the price action is here to mitigate our point of interest. This is where patience is very, very important. The rules is no signal, no entry. If price action did not mitigate your point of interest, you don't have any reason to execute your trade. So let's exercise a lot of patience as the price action is approaching our point of interest. Right now, the price action is selling a little bit, then the buyers pushing the price action towards our point of interest. Finally, the price action mitigated our point of interest right now. Remember, I said if the price action mitigates your point of interest, don't sell immediately. Wait for sellers to push the price action to the downside, then wait for buyers to buy the price action again, second time, and mitigate our point of interest. Then you position yourself as sellers here to push or to sell the market to the downside. Let's play the candlestick. Right now, the sellers are already pushing the price action to the downside. So we need the buyers to push the price action back to our point of interest. And the reason why the buyers are pushing the price action to the point of interest second time is because there was a key level zone once upon a time that pushed the price action to the downside before the price finally broke it to the upper side. Right now, the sellers just push the price action back to the key level zone. So we're expecting this key level zone to push the price action back to our execution zone. Let's play the candlestick. Right now, the price action already at our point of interest. So the question is, are we going to sell right now? No, we are not going to sell because the candlestick coming back to our point of interest, they are heavy momentum candlestick that represent the presence of buyers. We have healthy bullish candlestick, another healthy bullish candlestick, another healthy bullish candlestick. Before we can execute this trade right now, we need candlestick that represent the presence of sellers, at least one or two bearish candlestick pattern that represent that the sellers are now fully in charge of this market to sell the price action or to pull the price action to the downside. Let's play the candlestick. Right now we have a dark cloud. A bearish candlestick just formed right now. This candlestick is called hanging man. This bearish candlestick here is called hanging man. And the formation of these two pattern of candlestick is what we call dark cloud. It's a double pattern reversal candlestick that represents sellers in the market. So as a result of the formation of this dark cloud, we are going to execute our trade without hesitation. Then we position our stop loss above this liquidity here. Then we target twice of our risk to reward. It depends on your risk appetite or take profit appetite. But I love to target twice of my risk because I use this strategy for only day trading. Let's make the candlestick right now. As a result of the formation of this dark cloud that represents sellers in the market, the price action is already at our take profit zone, right? Our profit zone. So we're expecting the price action to push down to our take profit zone. Remember, price can't just sell down to take profit zone. Price will sell, retrace, sell, retrace. So we're expecting price to retrace here, then sell down to our point of interest. Price almost at our point of interest, then the buyers push the price action to the upper side. So we still have to exercise a lot of patience until the price action finally smashed our take profit level zone. If you find value in this video, don't forget to click on the like, subscribe, and turn on the notification button so that you can get notification when we upload another exclusive video tutorial like this. And if you want to be part of our free signals on Telegram, don't forget to click on the link below this video description and take you to our Telegram channel where we give out profitable and quality signals every week.